Hi, this is Randy Finney with the Right Side of the Chart, and this is a late session update for Monday, November 16th, 2020. It is 3:15 Eastern Time, so we have about 45 minutes to go. And I wanted to do an update on the markets and various other trade ideas or other things I'm watching. So we're going to go through in this order. We'll look at the indexes. I'll talk a little bit about that, short term, maybe intermediate to longer term outlook. I want to talk about the market leaders, the big FANG stocks and tech, and maybe hit on some of the sectors in the S&P 500. If I do that, I'm gonna rifle through things pretty quickly, because again, I want to cover more than just the equity markets in this video. And then briefly, I've been doing updates a lot on coffee, nat gas, gold, those other trade ideas. So I'll briefly do updates on those. A couple comments to make there, and then maybe hit on that Intel. Share that as a trade idea earlier today. Okay, we're going to start out. This is a 15-minute chart. Remember, I've kind of living in the world of intraday charts lately on the indexes, particularly QQQ. We've been kind of bouncing around. So in the 15-minute charts, I did post one this morning in pre-market, but when you show the pre-market trades on this platform, TC2000, the lines shift a little. So this is the regular session trades. More important, if you're going to replicate the chart, use these lines. What you're looking at here is a clear uptrend line, enough reactions now to most certainly validate it, and talking about, pullbacks at or near that trend line there. So there they are, enough reactions to validate it. Negative divergence, but only on the PPO. You don't have to have divergence for a trend reversal, and you don't have to have it on both indicators. Sometimes you get on one or the other. And again, divergences are not a sell signal. So what I'm looking for is cross down back below the zero line. That's a trend indicator of the white line here, the 9 EMA. We're still above. That's why I use the 9 EMA, the white line. You can see there the blue line dipped just below, but the white line effectively held there. It's the last of the two to cross is the only reason I use it over the blue line or the PPO line. And so that trend indicator is still bullish. And but however, if you get the sell signal anytime soon, you break that the bearish rising wedge, and let's just say you come down here. This is a target that I'm calling for again. It has been since we hit this 289-ish resistance level last week. 286 and change. It's about 286.11 or so right there. There's a gap right there. There's quite a few reactions. So that would be a quick pullback target for active traders if you get a decent sell signal. And remember, as I said this morning, I want to see not just this trend line break, but also NQ, the Nasdaq 100 futures, as well as ES, the S&P 500 futures. From where we're at now, if we did break it, you're talking about a 1.81% pullback. But as I like to say and say often, support is support until unless broken. So when you're in an uptrend, this is a near-term uptrend, you're making higher highs and higher lows, pull back to support is an objective long entry, especially if you think there's more to go. When I start seeing the divergences, that's when I start to, look out for a reversal of the trend when the divergences start to build. And sometimes you don't have a very clean uptrend line like right here. You had a big divergent high, very clear divergences, and boom, there was your correction. Just like you had bullish divergences here at the lows, positive or bullish divergences, and that was the catalyst for this big rally right here. So that's it. That's how we're looking. Again, 15-minute chart, short-term stuff, levels to watch. As of now, the very near-term trend is up, but that would begin to call it into jeopardy, as would this. We'll look at the futures quickly. We're zoomed in here pretty tight. This is a 60-minute chart of NQ, the Nasdaq 100 futures. There's your uptrend line that I showed you this morning. Again, enough reactions to validate it. It's just a short-term trend line. Goes back, until last week, November 10th or so. There's the dates and times down there. But enough reactions so far. And you also have the PPO, or here you have PPO divergence right there. You can see with prices making higher highs and that indicator making lower highs. Although you really made a new high here in the RSI, so no RSI divergence. So again, same story. Targets, if you're an active trader, I think that's a good one to focus on if you're just looking for a quick pullback trade, about 11,782. And if you're bullish, again, here you are. You're at trendline support. You're in a near-term uptrend. This is where you go long, just like you could have went long this morning, could have went long there. And that would be, as I think I laid out this morning, the next upside target should this support hold and we continue to rally, and that's about 12, 11, 17 on the Nasdaq 100 futures. That would be my next target. There's also a reaction high there, one could target. That's about 120.56, but I think that's a more likely target. ES, the S&P 500 futures, same trend line. I tweaked this and I did post it on the comment section under this morning's post that I slightly modified this trend line. When I zoomed in, I just wanted to make a better fit. I call a better fit. I like to look for the most number of reactions with both the candlestick bodies, the fat part, and the shadows, which are the, or you can call them tails. Shadow is on either side, a tail is on the bottom, a wick is on top. I'm talking about the skinny part. So this one has a lot of reactions, and I just when I zoomed in, you can kind of see those better, and I tightened up the trend line. So we're right about on it. You need to see a solid 60-minute close. See these little brief dips below? They're not impulsive. Those are just shadows, and the body's closed back on it. So far, ES is holding this trend line support. So there's the near-term trend. There's your previous high. That's also the all-time high in the S&P 500. And so at this point, we're so close. Usually when you get that close to new highs, you're going to run them even if it's just a marginal new high. And that's usually the MO of this market in recent years. When you take out, if and when you take out the previous highs, you get a marginal new high. You usually have divergence at that point, and you usually correct. So I put near coin toss odds whether or not we're going to have a little more upside there to take out that high. I'm just going to measure it for you. It's roughly, not exactly, but about 1.5% above. That's the high. Now if we take it out, you could go up. If it's a marginal new high, that could be 2, 3, 4, maybe even 5%. Just wanted to show you that that's where we're at. And my convictions aren't strong, but I did give you these trend lines that could trigger a pullback, and either prevent us taking out those new highs, or maybe just pull back, hit support, and then rally up. So there's the indexes, again, kind of on a mostly near-term outlook and perspective. And from a longer-term perspective, we go to the daily charts. This is SPY. I'm going to quickly turn off all the trend lines just to show you what is significant. I highlighted this recently. When we had that new high a week ago based on positive vaccine results, and again, that's what popped the futures this morning. Again, another positive vaccine results, this time on Moderna, was it? Whatever that company is. Last week it was Pfizer's vaccine. And there you go. Negative divergence was put in last week. And these are the things on the daily chart. Just like the last time we had negative divergence was all the way back here, right before the March lows. You have to respect these divergences. They don't always play out for a trend reversal, but much more often than not, in my opinion, in my experience, 50%, that's well over 50% of the time, they do play out for trend reversal. So you have the negative divergence there in the S&P 500. Doesn't mean you can't extend the divergence. It may still play out, but at higher levels, or that could have been the top. But again, you're looking, we're so darn close right now. And again, coin toss odds. Now, coin toss odds aren't anything I'm going to chase long, for what might be a 1, 2, 3, 4, 5% move. I'm just kind of, I feel more comfortable staying in this hit and run mode that I just talked to you about in the last couple of weeks, going back to QQQ or NQ, look for these little pullbacks to support, go long, short opportunities, pull back, catch a quick trade down to support, cover your shorts, and go long if the charts indicate that kind of thing. For the indexes. And we're going to get to the swing trade ideas here in a second. All right, so while we're on the broad markets, before we leave that, let's just talk briefly about sectors. Run through these really quick. This is the leading sector by far. There's not even a close second. The tech sector is there's 11 sectors in the S&P 500. Tech is by far the largest. I haven't updated these numbers in the last couple months, but it's always run, at least in recent years, about 25% weighting. So 1/4 of the returns of the S&P 500 come from the tech sector. And there's where your market leading stocks lie, the big FANG stocks, Apple, Microsoft, you name it, all those stocks. And clearly lagging, not anywhere near new highs, nor is QQQ. And so just to jump back to that, this has been our leading index because it is tech heavy, 50% tech. And you can see to get divergence, and we could rally. I told you that, recently I thought that it just in the last few days here that tech would outperform. We've started to see a comeback, or we did last week. This is what would happen if we do get a boost in the markets. The S&P runs to new highs, and we can get a little bit a pickup here and take out that previous. There's your all-time high in the Qs right here before this correction started. And so what this is showing you, the tech sector, the FANG stocks, they're still lagging behind. And there's two schools of thoughts on that. If you're a glass half empty gal or girl, meaning bearish, then you're saying, well, that's a red flag on the market, because those are your market leaders. And if you study the markets for a while, it's usually at the end of a bull run when the market leaders start to die or underperform, lag, then that's a red flag for the market. It means at that end of the stage of a bull run, you're seeing more and more junk stocks, lower quality, lower tier companies doing, catching a bid, because there's just no fear in the market anymore at that point. But again, a lot of market watchers will keep an eye on the market leaders. And so there again, that's the glass half empty perspective. Glass half full perspective, meaning if you're bullish longer term, says, okay, this is a natural and healthy rotation. Those market leaders had really run up. They got ahead of a lot of other sectors, and now that we have these positive, talks about, our results on vaccines coming out, it's maybe rotation, just some, portfolio balancing, profit taking in those big names, and money moving back into the beat down sectors, the airline, hospitality, transportation stocks, and some other sectors, energy sector. We'll get to that in a second. So I'll throw it out there, and look, you can have your opinion, I can have mine. Only time will tell whatever it is, which one it is, that is. All I can tell you is, as of now, the NASDAQ 100 continues to lag and is not not threatening new highs anytime soon. In fact, I'll measure it out for you. We're still about 4% off those previous all-time highs right there. It's not far. Again, so anything much above 4% will give us, if it happens anytime soon, that is, the one guarantee I will give you is it will be a divergent high, because these indicators are lagging by quite a bit. So it would look something like this. A little lift up here in the RSI, a little lift up in the PPO, along with that new high, and it will be a divergent high. And then you'll have negative divergence on the daily charts of both QQQ and SPY. And at that point, that might set the stage for a deeper correction, unless the buyers can just step in. We get a big, strong year-end rally into January and beyond, and they burn through these divergences, meaning they just, run them up to the point where we're above those previous highs on the indicators. Always a possibility. And, charts are dynamic, so we'll just have to keep an eye on them, see how they develop. Okay, I just noticed a little snafu in the video between charts. I usually hit pause, and was talking about XLE, but when I hit the pause button to go to the next one, it started the recording, I noticed. So I'm going to go over this real quickly. If I just covered it, I have no way of knowing until after the video is over. So I'm just going to say XLE, one of the most bullish sectors in the S&P 500, is what I laid out before the elections. Broke out right after, hit gapped above my first target right here, hit the second target at 34, pulled back, resistance once broken becomes support, pulled right back to that 32, 33 target with a low of 32, 34, close enough to go for government work right there, held it, and then took it out and put us above that second target now. Since the second target was already hit once, that favored that once we got up there again after we corrected off it, that we would take it out, and that's what we did. But what I was just saying, and again, forgive me if I'm repeating, I don't know if it recorded, 3830 was and still is my next target. There's a potential target up there, 42, but if we get to 3830 anytime soon, I would suggest taking profits. Even if you're a swing trader, I would put very high odds, again, if we get there anytime soon on a pullback, because you have the 200-day, this red line is your 200-day exponential moving average. It comes in right now at that 3830 level. We're in no man's land. We're between support and resistance. There's some minor resistance here. But again, and there's also the 200-day simple moving average. So we may get a reaction, and probably will, somewhere in the middle here. And again, I don't know if we'll go straight up there, but if we hit 38, I have it at 38.30, anywhere around 38 in the next, couple weeks here. If it hits it, I think it's a great time to take some profits. I think at the very least we'll consolidate, and quite likely we could pull back quite a bit. So that would be, my preference for XLE. Okay, let's get away from the sectors. We've got a few more things to cover, and let's see here. All right, coffee. Let's talk about coffee real quick. We can do the futures, or we can do JO. JO on the daily chart. This is the ETN for coffee. It's pulled back to that 30-60 support. Positive divergence on the daily time frame. 60-minute chart is the one I was highlighting for those of you that trade ETFs instead of futures. Hit the 32.92 target today, went on through there, hit the 34.60 target, a little bit above it now. Here's a little minor downtrend line you could watch, but if you noted in my comments today when I was talking about KC coffee futures also being at the first target there of the 115.85 level, I had said although reaction here is likely, the next buy signal will come on a break above 116.85 whether or not we get a reaction. So I wanted to make that very clear. And why did I say that? Well, it's the nature of the beast of coffee. The nature of the beast on coffee are strong trends. We're going to go here. Let me just keep it simple and go out to a weekly chart. Okay, this is going back to 2019 right here. This ETN's been around longer, but it was a different variation of it. I don't want to get you too confused, but JJOFF is the old JO. This company kind of made a little change. So we used to trade JO. We've been trading JO for years, but then this ETN company kind of retired that one. It trades over the counter now, and they revamped it. And that's why you're not seeing long-term charting history, but you can if you go again to JJOFF. You'll see the longer-term trading history. And this is the old JO that we traded for years. I just want to say that. Okay. I know I'm all over the place, but here's what I wanted to get to, and the reason why you may want to hold out when targets are hit on coffee is that coffee is just a trending stock, I'm sorry, not a stock at all, it's a commodity. Look at this weekly chart. Look at the color of these candles and the direction. These are what I call unidirectional rips and dip. There's a rally mode, all green candles, and to put it in perspective, from the low to the high, that was a rally. That was actually that candle there was our peak. Coffee rallied 31% in just over a month. Then it decided, okay, that was it for the end of that was the end of the run. Almost all red candles. Then we had a counter trend rally, all green candles, and it was a good, good rally. It wasn't, it was certainly worth jumping out of if you could have, if you were short or playing long. There was about an 8% rally in just over a month, and then the next downtrend. So you get the picture. Coffee doesn't. It can at times grind around, but it's either going up or down usually. That's the thing about coffee. And once it breaks out in these trends, look at that. This is almost all green sticks. One little red bar there, and it was almost a flat week. It closed. That's a doji stick. Almost closed in other words, that was almost a green candle. It would have been if the coffee was up, just closed up 1% or more for the week. 50% run, all green sticks, straight up. Same thing, turned around, dropped, almost all red sticks on the way down. This one was a little choppy. You get the picture. And this is why if you're calling for a bigger move in coffee, like I'm looking at maybe the next big leg up, you may not want to take the quick profits on NQ. I'll micromanage an NQ trade all day long. Even in a bull trend, I'll close out longs, game a quick short on a pullback, jump back in. There's more liquidity. Coffee has quirky trading hours. It's not trading 9 to 4 or 9:30 to 4 like index futures and everything else out there. It shuts down I think around 2:30 every day if I'm not mistaken, and picks back up later. And then again, the bigger picture which I've laid out on this and the coffee futures chart, big divergent low, and that's why I didn't look for a move all the way back down to the bottom again. We were a little bit above the bottom. This could be, may or may not, but it could be the next big leg up. And again, I just wanted to I wanted to impress that fact that this is, unlike the stock market, unlike a lot of other things, it's just usually up or down. It's like a switch on coffee. It's instead of an on-off switch, it's either rally or correction mode, and hardly anything in between. So that's that. There we are. Where we go, well, I already gave you additional targets, but I'm treating this as a trend trade or a swing trade right now. Okay, enough on that. Looks good, and again, the charts continue to firm up. Nat gas, just look at the futures. I did an update on that today. Last week, recently we broke out of this downtrend line, and that gave us a buy signal. And then I said, watch this uptrend line. You can go long on pullbacks to the trend line if you're targeting for a move up here, and you can also use that trend line as a level to put a stop on a break below there, give it a little room. Not only did we take that out today, we also took out this level right here, the 2898 support level. They were both taken out in one fell swoop on a gap down today. You don't always get that, but you can. And one reason I always say I like futures is they trade around the clock, mostly around the clock, but that's Monday through Sunday night. I'm sorry, Sunday night through Friday afternoon, like stock futures. Thing is, they shut down on the weekend, and because natural gas is more volatile than the equity markets, you will at times get these pretty big gaps when the trading resumes, and that's certainly what happened here. So either way, that was a sell signal all day long, 10 times over, especially when we took out not one but two resistance levels, and there we go. So that's nat gas. Nothing. I'll keep an eye on it, but I don't see any reason anytime soon to get in. That one stopped out and it doesn't look good. That moved down. All right, next up, gold and silver. And as I mentioned a couple weeks ago, there's an objective long here about 1852, and there was a trend line nearby, and I gave you two targets, a downtrend line right here. I've colored them blue in the chart this morning, and then potentially that 914 level. We're very close to the trend line, so we're almost to that first target. So far, so good. Nothing major in gold, and again, I don't expect fireworks in gold. If you're new to the site or you've been with the site but you don't watch every video, I understand that some people don't have the time. I've been very clear on this. I'm waiting for the next long-term buy signal on gold, and that would be a breakout of the euro-US dollar pair. In other words, the euro-US dollar is at long-term resistance. I've covered that quite a bit recently, so I'm not going to get into that right now. So until and unless that happens, the dollar and the euro are floundering around in a big sideways multi-month trading range, and as such, gold's doing the same. And so I'm just looking near term now. There is the potential we could break out any day in the euro, or we may get rejected off that level. If we break out, I will let you know as soon as possible. That's going to be on a weekly closing basis, but that will be the next big leg up in gold, and we won't even be looking at these little near-term targets. We'll be going back to the daily and weekly charts and looking for the next big move up. So just near term, looking okay. If you're an active trader, you can take profits there. I'm kind of leaning towards that 914 level now. And then, as I said before, and I say it often, if you're going to trade gold, you can trade silver, usually get more bang for your buck. Silver will usually go up or down more than gold. And you have an uptrend line here that silver has been walking up so far. These are silver futures. And providing objective long entries on pullbacks to that level, or an objective stop below. It already hit this 24,833 resistance / target level. If it can power up through there with conviction, next stop up here is about 26.22. Okay, last but not least, and forgive me, I was trying to talk fast to wrap the video up, get it short. I'm okay on time. 23-minute mark. I'm just going to end this with Intel. And, from now on, maybe I'll try to talk a little slower, and you guys can always speed these videos up. Just so you know, I like to do that if I'm watching a YouTube video. I'll go down to the settings icon, click on that, and then you can increase the playback speed. You can go 1.25%, 1.5%, I think even 1.25, 1.5, or even 2 times speed. And that gets you through them a little quicker. Okay, with Intel, I did point this out today, and I've been watching it for the last week or so here, setting up with these nice divergences right here. Again, of the semi right now, and again, this was our former leader. It used to be the biggest semi out there, market cap wise. NVIDIA is actually larger now by market cap, but Intel's still Intel. It's not going to go away anytime soon. Major support. Actually, that's not the chart I gave you. I gave you this board right here. It's cleaner. Okay, so you can see major support zone right here. Why is that a major support zone? This goes back to 2017. Gap. Reactions, 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 reaction. I mean, every single time since late 2017, since it broke above that level, without fail, every time the stock has pulled back to this level, the buyers have stepped in. That was also a downside target that I gave you guys, if you've been with the site for a while, back in 2018. I gave you, that was my target. We were in the all-time highs in Intel. Bullishness was rampant right at the stock at the time, and I called for a 25% pullback, 24%, pending a break of this wedge. Now we hadn't even, and I said no sell signal until the wedge breaks. I give you this bearish rising wedge. Said my first target's this right here, where we're at, that's that long-term support zone. We're just looking on a weekly chart. What happened from there, we went up 2% higher and broke down like the next day, I think it was, and hit my target to the button right there. And so it was for a 26% drop. And then we rallied up, put in another divergent high, hit it again. Rallied up, another bigger divergent high, hit it again. Rallied up, we've hit it again. So again, we've been bouncing off that level. But at the time, I gave you two targets, and I just want to throw this out there because I'm maintaining this one. I said first target would be a 24% drop followed by a reaction or a bounce, which we've had plenty of, and then ultimately a 32% drop. So I remain longer term bearish on Intel, but right now no sell signals, and we could grind around in this range for years. Some stocks in our range, and well, we've been grinding around since late 2017 in that big sideways range. So a breakdown below it, flipping back to this daily chart, should we break this low and break it with conviction, that would then open the door for a move down to that next target around 38.25 right there. And actually now, at this point in time, since we put in such a large range, I think a lot more potential there. But again, that's very long-term stuff, and we have absolutely zero sell signals on it. In fact, to go back to the daily chart, I could only, at this point in time, make a case to be long. We just hit support. We did it with positive divergence. It's a major support zone. We may hit it again. We may have a slight, breach, but you want to look at a solid weekly close below that level, not an intra-week. There's a little intra-week break, a couple intra-week breaks. They don't mean much. When you're looking at the weekly chart, you want to see a solid weekly candle. This is a daily chart here. So for those of you bullish, looking for, trade ideas, especially if you're bullish on the semis, again, this is the best looking semi that I can find right now. It reminds me of XLE when I started talking about 2 weeks ago. Of the 11 sectors, the S&P 500. To me, the most bullish one at that time was energy, and that by far has been the best performer since then. So if the market rolls over, here's the thing: if the market rolls over, tech rolls over, semis will probably roll over. That will most likely put selling pressure on Intel, and it could foil this setup. Just wanted to point it out, and you guys trade it as you want. Any pullbacks to that level, again, if we get another pullback, that may be another objective long entry. Again, as long as you don't break much below here, especially on a solid weekly close down below that support zone. These are all potential targets. Will they be hit? Probably not. Maybe that first or second one, but probably not if the stock market only has another 3, 4, or 5% max upside before a decent correction, before those divergences play out. But again, we don't know what the market's going to do yet. It hasn't even made those, the Qs haven't made a new high. The FANGs, the market-leading FANGs, are still lagging behind. So, little sector rotation from time to time is a healthy thing. But if those market leaders continue to suck wind, not a good thing for the market. You want to see money starting to come back into those. We've had plenty of sector rotation. A lot of the junk stocks that got knocked down, I shouldn't say junk stocks that the fundamentals turned to junk after when COVID hit. Again, travel companies, hotels, casinos, airlines, again, they're not junk companies, but at that point in time, their fundamentals were obliterated in their outlook. So there's been a lot of rotation into those, and I think a lot of those stocks in just a short order, and have already priced in most or all of what a vaccine, a vaccine that actually works would do. That's kind of my thoughts. So that should be it. And if you don't start seeing the market leaders start taking the lead again, not a great sign for the market. Okay, we will wrap it up here, and let me just check my list. Nope, that's everything I wanted to cover for today. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.